Technical Trading Part 2, Support and Resistance, and how to find the trades. Welcome back. What is support and resistance and how do we find it on the charts? And why is it so significant for us to find these areas? Simply put, support and resistance is the area on the chart where market has a high probability of stopping or stalling and also high probability of reversing. This is the best area to look for trades on any chart. Let's move to the live charts. Here we have an example of euro against the US dollar. This is the currency market chart. Before we start with the support and resistance, we have to talk about how significant are the charts and why do we look at the different time frames. As for example, on this chart you can see here that you can choose from, let's say we'll switch this one, you can switch to from monthly to weekly to daily, 4 hours, 1 hour. The higher the time frame of the charts, the more significant the chart is. So when we find the support and resistance on a monthly chart, it has a greater significance when you look at a weekly chart or daily chart. Monthly charts, basically you would look at once a month because every single one of these candles represents 1 month of trading. So this is 1 month of data represented in just one candle. So if you're a long-term trader, this would be more significant for you because you would look at the charts only once a month in order to place the trades and make a decision what to do. We are going to be looking at the weekly chart as a beginning or a starter because every Sunday or Monday morning I look at the weekly chart to see what's going on the chart in order to see if there's any significant improvement and is there a possibility for me to place the trade, or are the charts all over the place, so we're just going to skip that and move on to a different symbol or different security. This applies to everything that you trade, from options to stocks to futures to currency markets to Bitcoin. Whatever you prefer, it all moves the same way. The higher the time frame, the more significant the chart is. The lower you go, the less significant the charts are. They are not insignificant, which it only means that if you're going to the lower time frame, you will be hunting for the smaller trades instead of the bigger ones. If you're looking to capture quick profits, you would be looking at a daily chart to start with, and then place probably trades off of 4 hours or 1 hour or even 5 minutes. Let's take a look how we look at a support resistance and how do we find it. I'm going to switch it to the monthly chart. We are going to be focusing on candlesticks. However, there are different kinds of interpretations of the charts. You can see this is called a line chart and this is called a bar chart. Why do we look for support resistance? Those are the areas where the market usually stalls or stalled before in history. Since all the markets are repeating themselves, the history will repeat itself, and in many cases the market will come to the exact same area and it will either reverse or it will stall for a while. We are at the moment on a monthly chart. So the most significant area of support resistance is the most recent area, meaning where is price located right now? Price is located at this area at the moment. So we are looking for the most significant areas and at that level, right, where we are located right now. When we look for support and resistance, we always look to the left, where market stalled before. The market was in sell-off position and then it found support. It just stopped. For some reason it stopped. It doesn't matter what the reason was, just it stopped. And then bulls took over and tried to move the market higher, didn't make it. Then bears took over again and market comes back and pretty much stops at the same area where the previous stop was located. And then the bulls take over again. They tried to move the market again in a higher area, but the bears are too strong, so basically market falls again and again stops at the same area where market stopped before. So if we can take a line tool and mark the first area where we stopped, you can see now that this here, and this here is a very important area for market to stall. I'm going to move it a little bit higher here so we can have all the data included. Market stalled here, pulled back, came down, retested again, couldn't go through, went up again, came down, retested. We have a beautiful buy signal and the market just takes off. We are very close to that significant area. This red line is actually showing us that this area is significant. If I place one more line, so we can see that this area is not actually perfectly defined by one line. You can see that here the market kind of went through a little bit and then stopped just a little bit higher over there, and then he went a bit deeper inside but then pulled back right away. So this is basically support and resistance. Sometimes it will be exact line, so it will be exactly to the point, and sometimes you will have this kind of a what we call areas of trading. So this difference between this line and this line, it's kind of an area. So we are looking at this area where market might stall at this point when it comes down here. What we are hoping for at this point of time, we can see from the left to right. If you can see, the market is kind of nicely waving. It's selling off at this moment. So what we are looking for is basically when the market comes to a certain point to either puncture through and continue on with the sell-off, or it will come back here, it will stall, and it will give us a nice buy signal again to get in and try to ride the market again to the significant area, which was right here. This was the last peak that market made that was actually very significant. We're going to switch to the line chart. It is sometimes much easier to find these support and resistance levels on a line chart. Difference between the line and candlestick chart is the candlesticks are showing high, low, open, and close for all the candles, while a line chart shows only close for all the. So what does that mean? That means that when you look at the candle, this was the open for the candle right here, and this was the close. If I put a line right here, you will see when I switch to the line chart that that's where the market closed instead of. So it basically skips all the wicks. Wicks are not shown on the line chart, so you will not see the data from the wicks, which is very important to us. So we're going to use a line chart only to plot support and resistance and nothing else. So I'm going to just remove this line, squeeze the chart here, and now we are going to use line again. So we see the market is at this point of time, or at this point here. So we are going to place our line of support resistance right here, because we can see that the market stalled before here, and then in the past you can see that market stalled here and also stalled here once, twice. So this area has quite a lot of significance in trading. We are going to adjust this line once we switch to candlestick charts. We can see that there's one peak here, one peak here, one peak here. Do they correspond? Well, this was the most recent area, so we're gonna take it like this, and then we can see the market corresponds here. It used to stopped before in history, and this is dated in 1994. And then back in 1999, somewhere around here, and this was a very significant area where market was going up and down. And then we stalled again in 2010, and then we stalled again at 2012, and then we broke through that, and then we stalled in 2017 at that peak over there, right here. So now that we have this plotted on the screen, we are just going to increase the size of this chart and switch to candlesticks, and now you can see how it corresponds to the candles as well. So we are going to readjust this a little bit here to this area. And why do we do that? But if I look at the market, as it was falling, it came down and it stopped exactly at some certain level, okay, and then it pulled back, came down, didn't quite come to that point, but then pulled back again. So that area seems to be being a very, very significant. Then The third time when the market came down, this is where the wicks are coming into place. We can see that the market came down exactly to this line. So why is this area so significant for us? When the market came the last time to this area, it broke through. Sellers or bears were not able to hold the market below that line where the market last stalled, and the bulls or buyers took over the control and they pushed the price back above this line. So this is why we get these wicks. Wicks are showing us that market buying and selling power is actually showing us that sellers were in control up until this point here, and then buyers took over and pushed the price above this line. So this line is very, very significant. The second session, or the next month, this was a 1 month fighting back and forth. Market tried one more time, and this is how the market works. Every single time, market tries to break once again below that line. It breaks, but then the bulls take over. They run the price to a certain point. This beautiful candle opens up for us, and that candle is called Engulfing Candle. This candle is a signal to get in the market and buy. This is a crude oil US dollar. We'll take a line tool. As the market was coming down, it found this support area, and we're going to mark that. The market rallied after that. It came to a certain area and gave us a nice sell signal. It stopped once, stopped second time. So we're going to mark this area. And as you can see, this area here that we marked corresponds to the area here and area here. And then the market broke through. And once it came back to that same area from before, it stopped once, stopped second time, gave us a beautiful sell signal at this area. This is a beautiful sell signal, and the market just dropped from there all the way down here. As the market was dropping through this area, as you can see right here, as the market was coming down through this area, it is very important for us to look at the smaller time frame and to see the area where we have an opportunity to get a more profitable trades. I also say that these are the areas where we hunt these trades. So let's switch to weekly chart. Reading a weekly chart is basically the same as a monthly chart. I plotted these two lines on a monthly chart, as you can see. This was on the monthly chart. So these area of support resistance, they're staying on the charts as you switch between the different time frames. This is a daily chart. You can still see where the market broke through this area and then gave us a beautiful sell signal right there. We'll take an example of the Air Canada, but this time I'm going to pull the chart all the way to the past. This is as far as the data goes. So we'll just mark our levels of support resistance on in the past to see how it correlates in the future. You can see the market stalled here. You can see the price closed over here and correlates with this one here. So we are going to mark that one. As we come down, we can see that we stalled right here. I'm going to mark that one. We're going to mark this one here because we stalled here before. We're also going to go all the way down here. As you can see here, we stalled and found the bottom, so this was a level of support. There we go. Go up right there. We marked this line as well. It stalled, it found resistance, fell down, found the support exactly on the same level as this, and then pushed back again, stopped at the same level as this before, stalled again, pulled back, and then finally broke out, and this is called a breakout. And then we went how far? Well, to the next line. We didn't see this part here before, so we stalled here, we pulled the line, Market went all the way up to here, stalled, pulled back, and then went up again to retest this zone here. So this line, this area of resistance. So this area of resistance is very important. And then finally broke out from there and then continued on. Again, found the support at the same level, struggled in this area for a while, and then it broke through again. So we can see that this area here and this area here correspond. So I'm going to put another line here because we can see the market stalled twice. So we'll put the line right there. I'll see how far this is going to take us. I'm going to switch this chart to the weekly chart to see how these lines correlate with anything that we have on the chart at the moment. The price is located at this level here. The sell-off was happening here because of this COVID-19. Where do we find the support? Well, this was in the past a support level, 14.92. So that was the price that was being paid for the stock. We found the support right at that area, and that corresponds to the area from the past. I'm going to switch it to a daily chart. This whole chart now that you're looking at is based on the past. It's something that happened in the very, very beginning of the trading of this specific stock. And we can see how very close these lines are shown on the chart. What happened before in the past and what's happening at the moment, and where the market will be stalling or where the market stalled somewhere exactly at the same levels. We always look at where the price is at the moment. So we are going to just a little bit readjust this area here because this is where we stopped. Most recently, this was the area that we stopped. And then this area here, if you can see here, it almost corresponds perfectly to the past. But I'm going to just readjust it a little bit because right now we are at that level. So that was the important level for us, 1350. And we're going to readjust this one here because the market stalled right here. And we are at this level at the moment. We are going to readjust this one a little bit, just a little bit to this level because it corresponds to this peak right there. So what can happen here is the market can come down all the way here, find the support right there, and then bounce off. You might have a struggle going through this area here because we had a support there, support here. But if it does break out, it might go all the way here to 1943. It might come down here to retest this area again because that's how we move. Most probably after that to continue on to this peak as well. This $20, $22 range seems to be struggling for this stock. Let's take a look at the Nasdaq. The most important area for us to look at is the area, so where the market is right now. So if we take a look at this area here, this is where the price is located at the moment. I'm just going to expand this a little bit. I'm going to switch to line charts because sometimes it's much easier to find these areas via a line chart than. So let's take a look at. We're going to take a horizontal line, and we can see the one peak right there, one here, one here. The price is on the close, so we're going to mark this area here. We're going to take again on high because the market is at this level here. We can see that market stalled right there, made another peak right there. So this could be a significant area right there. And at the moment, that's what I see. We're going to switch back to candles and take a look how this corresponds to our trading strategy. And we're going to move this a little bit lower here to include these wicks. So at the moment, this market is in a range. So what we're waiting for, either to hit this line here and maybe to continue on, or hit this line here to retest it and then continue on in the buy zone. We can see clearly that from left to right we are in a buy zone. So the market is recovering at this point of time. Let's take a look at the S&P 500. We can see the market was coming down, found the support, bounced off, broke through, found the support, and as it was climbing back, it came up to the same area as it was before. And now we are at this level again, so we are looking either market to give us a signal to sell off here, or it will break through and it will continue on to this area here that corresponds to these peaks right there. Let's switch to candles and we can see how this happened. So we came down, we found support, market bounced off, we broke through, we came back, we are now at the same level. We can see that where we are right now, that markets tried to break through and then it was pushed back. The price closed below this line, and then once again we are at this level here. We are trying to move through, but seemed to be a huge struggle between the bulls and bears at this area. And how do we know that? Because we have these two beautiful dojis. Well, this one is in formation, so this one we can claim as a doji at the end of the session today. But this definitely is a doji, and that represents market struggle between the bulls and bears. So at this point of time, we are just looking for a good signal, probably to sell at this point of time, or to buy if it goes into above this and price closes, retests, and then continues on. This is futures. So this is futures chart. As I said, every chart works the same way. Stocks, currencies, futures, they all look at the same stuff as we look at on the chart, and it's always a support resistance, and it's always respected, and it's always repeating itself. There we go. So this would be a first area. We have found support here, we bounced off, found another support, we bounced off, and then we finally broke through. The market struggled to go backwards or onto the upside, and we just dropped. Now we are up above this line here. We're looking to go long because from left to right we can see that the market is slowly climbing into this area. We can see that the market stalled as well on this area here based on this peak here. We're gonna mark it like that. So we have a market coming down, has a struggle to break through, pulls up, finally breaks through, and then has struggled for 1-2 sessions to break above this line. Can't do it, so it was in the range for a while, found the support at this level here, finally starts taking off again and cannot break through again, and then it struggles a couple more times to go through that area. Nothing happens, and then it just drops. Now where we are in the middle of this area here, from this support, which corresponds to this, to this resistance. So market is heading towards that resistance. Two scenarios: we can come to this level here and just sell off, or we can come to this area here, break out, come back, retest this area, and then continue on. We can come to this level here and we can either sell off to that area, or we can have a breakout like this. Market comes down to retest this area and then continues on to the upside. And that's how every single market works at all times. This is the futures, light crude futures. We looked at a stock. This was the Air Canada stock. We looked at the Nasdaq. We look at the S&P 500. Same thing, no difference. We all are looking at the same stuff, and always. In the next video, we will be talking about once we find these areas of support and resistance, we'll learn how to trade off of them, how to look for these signals, either for the breakouts or signals to buy or sell, where to place the stop, where to place our target, and how to protect yourself in the market. As I always mention, these kind of things you cannot just memorize. You have to kind of take a look at it on your own. So do open the TradingView account. It's free, and then you can take a look at any interesting stock or future or anything you like, and just practice finding these areas, and then we'll combine all this knowledge from the candlesticks, support and resistance, and the breakouts. We'll see how everything actually comes together, and we can trade with it and make some profit. If you do like my videos, please do subscribe. It makes me happy to make more videos for everybody and to explain even more. If you have any questions, please do PM me on Facebook, and I will answer any confusing questions if you do have it. Thank you, and have a wonderful day.